This episode is brought to you by Bureau, our title sponsor. With 8 vibrant locations in Miami's best neighborhoods, Bureau is the perfect co-working place to work, network, and thrive alongside other entrepreneurs, creatives, professionals, and local businesses. Find your space at bureaumiami.com.
All right, it's 2026.
Well, we got some nerds and some charts in front of us.
Yeah, we got the boys back here talking data.
I'm looking at graphs. I have no idea what this thing means. I'm gonna need more scotch.
By the way, it's Ben's birthday, and we got to give him a cheers. Juan's being a little bitch today. He's not drinking. So we're gonna call him out on that.
No, now.
Yeah. That's
we got to cheer now.
Live on air.
Pour something.
Live on air.
Well, happy birthday, man.
Yeah,
Thank
cheers.
you. Thank
Happy
you.
birthday.
Cheers, guys.
To a great 35th year.
35th.
Cheers, bud.
Cheers, bud.
I can't do it with water now. It's like bad luck.
Yeah.
Is it? It's serious stuff,
It's
huh?
bad luck,
Okay.
yeah.
It's true.
I'm gonna get in a car crash on the way home if you chink my glass with that.
Well, before we get into predictions, let's talk about predictions on the Super Bowl, right? We were talking about that. Graz, I imagine you're a Seahawks fan.
I'm going with the Seahawks.
Yeah, of course, because you're a Boston hater like I am.
Yeah. Well, it's really more about the team. I just
Yeah.
think they're more mature. I
Okay,
think
I'm a Boston hater for sure.
It's not personal against Boston. I love Boston.
Yeah.
And no foul against the Patriots, but I think Seattle's got a better team. I think they're gonna run it.
What do you say, Juan?
I don't know. I'm more of a hockey guy.
Yeah. All right.
I just hope everybody has fun.
Yeah.
You know?
Yeah.
But we're not even going to ask. Ben didn't even know the Super Bowl was this weekend.
He's got his birthday to concentrate on. It's not his fault.
I'm just trying to go wakeboarding.
Well, cool, guys. Thanks for coming back to do the quarterly market report. We want to get into it, and as usual, we're going to start with the industrial. We got the industrial Jedi here, Juan Arias from CoStar. Let's talk tariffs. Let's talk economy. Silver is all over the place. Gold is. We can't decide if we're up or down. The markets go up and down. We still have tariffs that occasionally come up and go away and get higher and then lower.
Yeah.
So a lot of uncertainty. The 10-year started to creep up again. Now it's kind of leveling off again. The market doesn't know which way it wants to go. So what are you seeing out there in the industrial?
Yeah. I think there was kind of hope that by the end of 2025, a lot of that uncertainty was going to go away. And then the Greenland stuff started, and that kicked up more uncertainty with European trade. And so the expectations that, I think for the remainder of the administrations, we're going to be in a uncertain environment around trade policy, because the administration is using it as a tool for geopolitical gains, right? So I think going forward, we're going to have these ups and downs still ahead. This year we are having talks around USMCA with our partners in Mexico and Canada, so we'll look out for that as well. And now it's all the metals issue, where China is the main refiner of most of these metals, and we need to figure out where we're going to get these metals from. The big one, I'm less concerned about gold and silver. I'm more concerned about copper. So copper basically feeds our entire electricity infrastructure, which we need to build out. Even more so now with the data center demand that we're getting, with the advanced manufacturing demand that we expect to get, and with the advanced logistics and automation of the supply chains. All of that requires a lot of electricity. And what we've seen is a massive stockpiling of copper over the last couple of quarters to the highest levels that they've ever been, that we've recorded since the early 2000s. And that's, trying to get ahead of potential tariffs on copper by the end of this year, early next year. So yeah, I think that we're still dealing with buying inventory earlier before tariffs hit, Now it's shifted to the metals world, and we're seeing it in the copper side, because we need it, right, to build all of this infrastructure out.
Where do we get most of our copper from? Is it South America, Chile?
Chile, Peru are the big exporters of copper. So I'm sure they're very happy right now, but maybe in a year's time, the story is going to change once the tariffs hit.
Gotcha.
Yeah.
All right. And what are you seeing in terms of port traffic?
So we saw a buildup of inventories through the second half of last year and into late last year, and that kind of began to recede towards October, November, December, and it did not peak above prior peaks. So that just means that we're kind of keeping the inventory pools stable. We're bringing stuff in as we need it, but also trying to get ahead of future tariffs. So it was a buildup for, all the holiday spending that's happening, and now the expectation is, at least from the National Retail Federation, their expectation is that it's going to be a slow start to 2026 in terms of port traffic. We continue to see the shift away from China to Southeast Asian imports, as well as Mexico and Canada. Trade with them has been stable. It hasn't been growing as fast as it was once, but it's kind of plateaued. It's not falling off a cliff. So yeah, I mean, the first play of supply chain shifts has happened. So hopefully from here, we get a little bit more clarity around that. But again, it's uncertain, because if the tariff tool is going to be used going forward as a geopolitical tool, it's very uncertain, like who's going to get whacked next, right? So
I think that's been translating a bit into the leasing market as well, right? We've seen a lot of the really large scale, I'll call it institutional industrial, million square foot plus. Demand for that is definitely down over the course of the year, relative to 2024. So those big warehouses definitely are not in as strong a position as they were. The coastal markets, the port markets are not doing as well as some of the other inland markets for distribution. So the large-scale distribution is really sort of stabilized and arguably even probably declined in value over the last 6 months. And, the latter half of the year, as this uncertainty and tariffs were weighing on it, a lot of people were sort of reevaluating that industrial asset class and saying, cap rates are as low as they could go. Now we have a slower down velocity in leasing. We're seeing an uptick in vacancies in a lot of these coastal markets, and we don't see a clear path for growth. That started to stabilize the industrial market values, and even in some cases, we saw a recession in some of those values.
Ben, you know what they say in real estate: if people don't know you, they're not doing business with you.
Exactly. That's why the Built World podcast works with top of mind public relations, because being a best kept secret sure doesn't pay the bills.
Paula Uspa Abbott, the brains behind Top of Mind PR, is a former real estate journalist, so she knows exactly what makes the media pay attention.
And let's be real, getting in the press isn't just about bragging rights. It's about building credibility, landing deals, and making sure the right people know your name.
Whether it's top-tier media coverage, killer storytelling, or just making sure you're the one people think of first, Top of Mind PR has you covered.
Want to stand out? Hit up topofmind-pr.com or email info@topofmind-pr.com.
Because in real estate, if you're not visible, you're invisible.
What's driving the coastal market decline?
That's usually most of our port markets.
But why is that?
That's your import-export. Those are your import-export points.
So
just the uncertainty, like what Juan was saying?
Yeah, the weakness, most of the weakness has been focused on the West Coast markets. So the high exposure to Chinese trade and the volatility behind that trade over the last couple of years impacted demand for logistics properties, mostly like Inland Empire. It's
because they were super hot for a long time. Weren't they?
Yeah.
That's how it goes. Right?
Yeah, but now they're trying to find like a foothold again, and I think this year it's kind of gotten a little bit better at the start of the year. Lehigh Valley is another one, national regional distribution hub that it also got hit. But the East Coast in general has performed a little bit better than West Coast markets, and if you look at properties that are stabilized, large industrial logistics properties that are stabilized, built between 2000 and 2023 in the East Coast markets, the vacancy rates have remained low, while the West Coast properties, the vacancy rates have ticked up, even for the stabilized, the properties that were supposed to be stabilized. So there's been a lot of space give back, apart from a lot of supply that also came in to areas like the Inland Empire that's impacting rent growth performance there. Now, if we continue to see a shift towards Southeast Asia, a lot of these West Coast markets also have a good exposure to Southeast Asian trade. So we might be able to supplant some of that Chinese import activity with Southeast Asian activity, which is more or less what we're seeing. But now net, has it supplanted it completely? Not really. And also, the lack of demand right now for goods, and specifically on the home goods sector, furniture, et cetera, which is connected to the housing market, to population growth, many other things, that's really weighing on overall demand for bulk item movements around the economy. If you look at the inventory to sales ratio for this sector of the economy, mainly the building materials sector, it's the highest it's ever been. So they're holding on to a lot of inventory and they're not really selling it. So there's no tailwind behind a buildup of inventories from these bulk item players right now. We'll need a lot of population growth, a lot of home sales activity to come back significantly for that tailwind to kick back in and drive that throughput again. The heartland basically, and if you go like Texas all the way north, those markets are performing a little bit better. But if you look at demand over the last year or so, it's basically just been Texas. It's Dallas and Houston absorbing like most of the industrial product. And that's because they have a lot of supply, and also because, for example, Houston has had tailwinds from the petrochemical industry, anything related to plastics. Shale oil has been a beneficiary for plastics production. So that's been helping out Houston, and Dallas, just the sheer growth of Dallas has also been helping it a lot. So a lot of that demand that went away from Inland Empire, from the regional distribution hubs, you can see that Texas, all those central U.S. kind of hubs are really soaking up demand right now.
And what happens to all those bulk purchases people are making and sitting on? Because they're doing that ostensibly because they're worried about tariffs. So they're just like...
Why they're not buying the bulk items?
No, they're not able to sell them. So they're building up reserves. We're not going to increase population growth. Doesn't seem like it's going up. So what happens? What's the outcome of all that?
So a lot of the players like Home Depot, Lowe's, Ashley Furniture, they've been putting up space for sublease and trying to figure out how to become more efficient with their existing space, because they maybe overextended themselves in terms of logistics space. So I don't know what they're doing with the inventory within that space, but I'm sure they're moving it around and trying to fit it into more like taller warehouses and pay a lower real estate footprint.
That's been a trend we've heard for sure. Everyone looking for higher clear height and lower square footage. Just go vertical.
Just lower that real estate cost overall, the inventory carry cost, which is elevated also due to interest rates, but
and escalating rents.
So. Yeah, I think that trend is going to be with us for a while, going longer. And I think the issue that we're running into right now is how that impacts overall net absorption, because it's a headwind, right? Because if we calculate net absorption as total square footage occupied, and these guys are going up in clear height, then there's demand for cubic square footage, but there's not that much demand for floor square footage.
Well, I don't know about the rest of the country, but like in Miami, no one's building super high, clear height buildings. No one's building any buildings right now. So
yeah, I mean, I think for like Prologis, what they were building were 36-foot clears. There's areas in the country that are 40-foot clear now. That's becoming the norm. So they've gone ahead and gone for 40. And then you have like cold storage, which is a different story, and they go really, really high. But Miami hasn't had that significant push behind it. I think we've had an oversupply in general of brand new large logistics warehouses that are still sitting there unleased. But we're not a national regional distribution hub. We're more of a local distribution hub. So we don't really need that many tall, large warehouses. We're not an Inland Empire. We're not a Lehigh Valley. We're definitely not even a Dallas, right? That's completely different size parameter.
Makes sense.
Ben, you and I are all about PropTech, and if there's one tool we absolutely cannot live without for our commercial real estate brokerage business, it's Vista.
Absolutely. Vista is incredible. We use it every single day, and we're always wondering, how do they do this? Every evening we get an email from them with real-time closed transactions. No more waiting around for months for the property appraiser to finally update.
Yeah, whether you're doing industrial, retail, office, land deals, they have every closed transaction. And it's not just the speed, Ben. The details are on point. Seller and buyer info, contact details, phone numbers, emails, everything is accurate.
It's hands down our top prospecting tool to farm for warehouse deals in Hialeah. Vista keeps us one step ahead always. It's also the best way to search for comps when putting together opinions of values for clients.
Head on over to Vista.com and use code BuiltWorld and get 30 days free access today. VIZZDA.com. Let me ask you a question too, Juan. In terms of we're seeing slowing port activity on the West Coast. Are we seeing any manufacturing coming from either, increased manufacturing in the U.S.? Are we seeing more from South America? Are we importing more from other countries that we typically didn't, that are a little closer to us?
So Mexico, right?
Yeah.
Mexico became our number one trade partner over the last few years. It used to be China, and now it's Mexico. So Mexico has a stronger tailwind. It's very well connected with our supply chain, and just being part of USMCA, it's supposed to be a little bit more protected from the tariff scenario. But we'll see what really happens with that. But yeah, it's mostly Mexico, and then the shift to Southeast Asia, just because the supply chains for semiconductors, all in the South Korea, Taiwan, a lot of that coming in, and then supply chains related to all of the goods that we used to get through China are being diverted through other Southeast Asian countries.
The Chinese are sending stuff to Vietnam and then sending it to us and saying it came through Vietnam. So we're not really buying as much from the Chinese, but we're actually.
But we are.
But it's just being rerouted through Singapore and
the same
Vietnam.
Capitalism sure is a bitch, ain't it?
It really is. It's tough. It's tough to keep the whack-a-mole down.
Same thing is happening with Mexico too, right?
Yeah, Mexico to a certain extent, and the Chinese were smart. Like, they were already investing in manufacturing in Mexico before this entire thing started kicking up, right? So the Chinese are going to try to work around all these issues, and we'll see how good the U.S. is on policing some of these issues, because there have been some statements made around how we're going to deal with the transshipment of goods and stuff like that. But it's not easy to track that down. We'd really need to invest in a federal body that goes out and tracks all this stuff down, and our current administration doesn't want to invest in the federal government. So it's a tricky situation right now. And in terms of manufacturing coming back to the U.S., what we've seen is some of the pharmaceutical companies make some announcements. And there's been an improvement in aerospace manufacturing. The expectation is that Boeing is going to be producing a little bit more this year, and it's going to be recovering as well. And defense sector is supposed to have more tailwinds coming back, but most of the manufacturing is still the semiconductor manufacturers that came in over the last couple of years because of the CHIPS Act, and now it's all going into data centers. So all the semiconductors are going to data centers. All the construction spending data is flowing out from what used to be the warehousing sector, and now it's going into data centers. So the big story now is the data center, and I think the manufacturing of anything power related is going to be big news over the next couple of years. So whatever it is, it doesn't matter if it's renewable energy, if it's nuclear, we just need the energy because the consumption from these data centers, as well as all of the other things we want to do, is going to be tremendous.
And do you know how many data centers are in the pipeline right now?
Last time I saw, I think we were like over 200 under construction. Which is the highest we've ever seen. A lot of them.
How many data centers do we currently have in the U.S.?
It depends on who you ask. I think we're tracking around over 2,000. Okay. So
an increase of 10%.
A lot of those are privately owned, though, right?
Yeah,
In that
yeah.
Tracking. So they're dedicated to a company that built a data center for their own purposes. Right?
Yeah.
But now what they're doing is they're syndicating that out. They're letting investors build the data centers, and they're taking lease contracts with the major users of the data center, as opposed to them just building their own. So we're kind of seeing a shift in the way the data center construction financing is running. But to Juan's point, the main driver is power, right? The site selection on these data centers is power, and then relative distance to the main bandwidth that they can push the data out. And I will say this is a really dangerous time. I think we're definitely plowing a lot of money into the construction of these data centers because the demand seems like it's infinite, which is great. But the technology moves so fast that I can't help but wonder. We did probably, I would say early 2000s. We were working for AT&T. We did appraisals on all of their switching stations around the country or in major regions. And it was amazing. We would go into these 100,000 square foot buildings that you'd pass. You can drive around Doral, you'll pass them all the time. They're huge brick buildings that are 100,000 square feet, no windows. And you go, wow, what is that building? It's a AT&T switching center. The equipment in that 100,000 square foot building could have fit in this office, you know what I mean, 1,000 square feet, and the rest of the building was vacant because over the 30-year period that they built it, the technology changed so much. I wonder if we're not kind of going down the same path in a certain way with these data centers, where we're building them in proximity to where you can get power allocations from the power companies, but we're not contemplating the fact that probably within the next 5 to 10 years we'll have small modular reactors that can be put on site just to provide power to the data center or provide power. So the change in power is going to, over the next 10 years, is going to change the dynamic of that.
Wow,
number one.
That's pretty interesting insight right there.
Number two, the power loads on these things right now, just because the equipment and what they're running, we're going to get more efficient with that over the next 10 years. So we're building these 30 and 40-year life buildings that probably in 10 years are going to be functionally obsolete. And the problem is there's no alternative reuse. What are you taking a data center and turning it into when it's no longer needed? So there's a lot of risk there, I would say.
So are these data centers, how many are there are floors? Is that what they are? There's a number of floors in them? How are they built out?
Ordinarily, the ones that I've seen are not multi-floor.
It's just one floor?
Single
floor?
Yep.
And how tall are the ceilings usually on these things? Could you strip everything out of it and just be left with a warehouse afterwards?
I mean, you could, but the construction costs on these things are, $600 to $1,000 a square foot. When you factor in all the infrastructure that's built around them, there's just no practical reuse for the cost basis that you have in it. Now, it all works fine if, your Microsoft contract runs for 20 years and they honor it. But a lot of what's happening is they're stacking up these leases to basically get off balance sheet financing for this capacity that they need well into the future. Right? They're making 3, 4, 5-year forward commitments on this. And the question just is, what change in technology can change that equation? And all of a sudden, there's a lot of excess capacity of data centers, and then what? But the players today are saying, well, we need the data centers right now, so we'll worry about that later.
I mean, all the boys plowing money into data centers can afford to lose some data centers.
That's what everybody says until the money losing starts.
But
Those VC firms will be fine.
We had the news around like Oracle signing out significant commitments for data center space, but they have the contracts already signed for the demand behind it. So I think that we're still in the early innings of the data center story, and this technology right now it's being used by a segment of the population, but eventually, I mean, if you want to increase robotics, increase autonomous vehicle usage, all of that is going to use AI just to a certain extent, right? So eventually the usage is going to be much more significant than what we're seeing right now. So I do think there is demand there as it is. Now the questions are around the efficiency of the models themselves, that they can get way more efficient in the future and then utilize less of this infrastructure, as well as the energy efficiency. The semiconductors themselves have historically gotten really, really smaller and much better over time. So we'll see where it goes, but for now, I think the demand is real and it is there, and the real bottleneck that we're facing right now is the availability of energy.
Yep.
So even if a piece of land is stated right now that that's going to be a data center development, it probably won't break ground in the next 5-6 years because the access to power, the infrastructure is just not there. And it's going to take 5 to 6 years to actually catch up. So that presents a little bit of a bottleneck to the historical oversupply that we get in other industrial segments like logistics, where it doesn't really matter. You just build 4 walls, just put it up, and there we go. So it's a different supply wave that we're going to get. But yeah, I think the repercussions right now are on the existing electricity grid. When you look at electricity prices nationally, they've risen dramatically. So we used to be at 14, 15 cents per kilowatt hour before 2019, and now we are closer to 20 cents per kilowatt hour. The increase has been, I think, last time I checked, was like 6-7% compound annual growth rate since 2019, 2020. So much faster than inflation, and it coincides pretty much with the construction of all of these, the start of all the data center construction.
I read an article the other day. I think they said 22% of Virginia's entire electricity generation is used by data centers at this point.
The good
That's where
thing,
they all
so
are,
good,
right?
the
They're
good
all
thing,
in the Northeast.
if you look at the 2 states that have seen the strongest increase in commercial electricity consumption, it's Virginia and Texas. And if you look at, Texas makes sense, a lot of population growth. But then you look at Virginia, it's like there's no population growth here. So what's going on? It's all the data center. It's all the data center demand. It's crazy.
Yeah.
But now we're seeing, Texas also increase the amount of, if you look at the top states for construction, Virginia is really up there. And then Texas is second, well ways behind Virginia. But still it's second there in terms of the construction activity of data centers.
And why those 2 locations? Is it just access to the grid, the location on the fiber? Like what is?
So I think there's Texas historically has had a pro real estate environment that allows you to build. There's plenty of land. And the electric grid is completely separate from the rest of ours, and it's highly privatized, so all that infrastructure can be built out very differently from what's done in most other states. So the access to power is becoming more and more of a tailwind behind Texas. And there's been a couple laws passed over the last few years in Texas to kind of help ease the impact from these data center developments on the grid. So they're kind of on the leading edge right now on creating kind of this new environment that we're going to live in where, how do we deal with the extra demand and how we protect the residential consumer from higher electricity costs from the data centers. So the law basically is, it helps the data centers so that they have batteries on site, and while the grid is not at peak hours, it sucks up a lot of electricity, stores it in the battery, and while the grid is being used in peak hours, the data center lives off of the batteries instead of hitting the grid and increasing prices. So we'll see how that continues to evolve, but right now it's like, okay, get batteries on site so you can work with the existing grid, get solar, get renewables, get any type of power plant to help you on site to kind of help with the costs. And then you have an announcement like what Microsoft just did, where they basically said, look, we're going to foot the bill for any increases in electricity costs directly. So they know that they got to help with those costs to also make it attractive for the development to actually happen. Because if not, the local communities are just not going to want you there if you're going to raise my electricity costs.
Remembering that the regulated utilities can pass on capital costs in their component, out per kilowatt hour, right? So they look at what it costs them to generate, and they make adjustments, and they go to Public Utility Authority and they say, hey, we need to raise rates 2 pennies or 3 pennies or whatever. But if they're doing huge infrastructure projects, they're also allowed to amortize that cost into the cost of electricity. So when you have high demand, all of a sudden they have to build huge capital, they have to make huge capital investments, but they're passing that on to all the ratepayers. And what then the tension is, the residential players are saying, wait a minute, we're not really getting any increased efficiency or, you're not building excess power to lower our cost of electricity. You're trying to meet demand, but you're paying for all this capital infrastructure to service these data centers, but now I'm paying 15 cents a kilowatt hour instead of 11, and you're passing it all on to me. And so that's part of the tension is how do you, how do the homeowners, how do the residents react to that. I would say in Texas it's probably a better environment for them to say, because they already had historically low costs, right?
And can't they just burn shit?
And they can do whatever they want. It's Texas.
Well, I mean, I think there was a Bloomberg analysis on this recently, and Texas hadn't seen such a significant rise in electricity costs relative to the other states with data center development. But they did note that the electricity costs had increased significantly in communities that are close to the data center. So it is 100% having an impact in some areas more than others, but yeah, we'll see how this evolves. It's super interesting.
Some of you might know that I'm in the middle of building a Live Local project right now, and finding an internet provider was way more annoying than it should have been. Endless acronyms, pricing all over the place, and me chasing these guys for proposals. Then luckily, I came across Celerity Fiber, South Florida's boutique internet provider for new developments and multifamily communities. Working with them feels like working with a company your friend owns. They actually answer calls and texts, send quotes fast, and are genuinely great to work with. Celerity designs and installs fiber internet built for modern living. Fast, reliable, and ready from day one. From luxury high-rises to affordable communities, they deliver high-speed, scalable internet with white glove service and local support. The kind big internet service providers just can't match. So if you want to future-proof your property and keep your residents happy, check out celerityfiber.com. That's spelled Celerity, fiber.com, and let them know the Built World sent you. Celerity Fiber, powering connections, elevating experiences.
And you're also mentioned something, Anthony, about potentially there being new technologies in terms of power sources on site. Can you talk a little bit more about that?
Yeah, I mean, Europeans have been testing these small modular reactors, which are essentially mini nuclear reactors. A lot of hurdles, I think, to get that launched in the U.S., but
they're operating in Europe now.
In Europe now, yeah. And I think once that technology starts to mature and there's an understanding of what it looks like, our technology in terms of power generation is going to get a lot better in the next 10 years because of this demand, because we can't afford to go through all the regulatory hurdles to build a new power plant, and when you can deliver, the right scale and size to be able to power a facility.
Yeah.
That's going to be a game changer.
And there's a lot of efficiencies when you have the power source right on site too, as well, right?
Well, yeah, because you don't have to have all the distribution.
Yeah.
You just basically have transformers going right to your building, right? But then you also have to maintain that equipment. So I'm not going to say that it's a zero, it's not a zero cost. But at the same time, it's reliable in terms of the timing. The issue now is the timing. And what we're seeing is a huge uptick in the land values for these data centers when the power is immediately available and apportioned. You have a commitment to get power to that site. The land value is irrelevant at that point. They'll pay anything to be able to start tomorrow, because if they have to wait, they don't know if they're waiting 3 years or 5 years or 7 years, and that affects the net present value of what the land is worth. So we're seeing some huge data center land sale trades where there's power available at spectacular, values. If you can get to small modular reactors where they can be put on site, that makes kind of all of the sites equal in terms of what they do, and that'll stabilize things. Although there obviously will be an increased on-site cost to build that and maintain it. The good news is electricians in the world are going to make a fortune over the next 10 years. If you're an electrician these days, you got it made.
Yeah,
you got it made.
We have a shortage. So I saw Goldman, it was Goldman Sachs. They looked into the need for all of these electrical engineers over the next few years, and by 2030, they estimated we need like 270,000, something like that. And currently the number of apprentices it's like 40,000. So that's
crazy.
Yeah, we need way more of these guys.
They're like the new coders.
Yeah.
Killed the coders. Now I'm bringing the electricians. We're trying to juice this shit up.
And a company like Microsoft not Microsoft itself, but Bill Gates, he had been funding a nuclear power company years ago. And I started tracking them when they were trying to test things out in China. That was years ago. The Trump administration stopped them from sharing the new nuclear power plant knowledge with the Chinese, because they were going to start testing it in China back in 2016. Stopped them. And so that basically put a pause on their development, and now they're beginning to do tests here. And in the next couple of years, we'll have the brand new nuclear power plants that should be able to feed off of existing nuclear waste. So they eat up the old power plant waste, use that as their new fuel, and basically it's a new power plant with less impact from the waste, and also it's supposed to be much safer, so it shouldn't blow up. Which
It's not.
That's always good.
It's not water cooled. It's not water cooled.
no, it's not water cooled. It's like
they've
it's like
figured
a
out how to
salt or
encase
something.
it.
It's like other minerals that dropped on top to like
Exactly.
cool it. Yeah.
Definitely a bad flavor in everyone's mouth when they hear nuclear, but I keep hearing consensus across the brightest minds that that's
It's
the
what
future.
Yeah.
That's the way forward.
Any data centers being built in Florida?
There were a couple announcements, and I think it was still like in talks with the communities up in the like the Space Coast and on those areas, like
sense.
going up to St. Lucie. But there's been some community pushback as it's more. It has some of it is due to the electricity and how they're going to power these things, and also some of it has to do with the water consumption and whether or not that water is going to feed back into the tap water that people drink and stuff like that. So we're not a big hub for data centers. There might be a few here and there, but the community pushback's already there.
So we have a nuclear power plant just south of us.
Yeah.
Is there one in Tampa as well?
I don't know. Is there one in Tampa? I'm not too sure.
Not sure.
How many nuclear power plants do we have in Florida? Do we know?
Do not know the exact number on that.
Just curious. All right. Interesting.
But yeah, I don't.
You stumped us.
I mean, you guys.
We usually rip these kind of stats right out of our ears.
We're gonna replace you guys with Gemini here.
Yeah.
Well, that's a super cool conversation.
Yeah, the copper story is super interesting right now because all of the stuff we need to build this electricity grid, these new power plants, like it's really tied to
copper.
It's tied to the copper.
Where are
and
the
all this
copper
metal.
mines?
Well, I think we have some domestic production, but most of the big production is Chile and Peru. So we'll need either better deals with them or
Or just take them.
oh man, and we haven't talked about Venezuela, but that's a different story.
Is it?
Yeah, I mean Venezuela also has. I'm Venezuelan.
Yeah.
And Venezuela is also, we got a lot of oil, but we're also mineral rich, and we don't even know what types of minerals we have.
Are we getting your authorization to go in, or what is this?
No.
It sounds like it.
I will tell you, I am very happy about what happened at the beginning of the year.
Yeah.
Very happy. So.
Seems to be the consensus among Venezuelans I know.
Yeah.
You think it's going to change anything?
Look, I think it's the right approach because when this country has tried regime change in the past and has done it really quickly,
It's worked every time.
Yeah, it's been
Perfectly.
a disaster. And well, this is not the same. Like Venezuela is not the same as other like a Middle Eastern country where you had significant religious differences and political movements that really wanted to split things up. In Venezuela, we're very united in what we want, but you still have to be very careful about how you change the current structure because we have basically a regime that is a terrorist against their own people. So right now, the vice president that became President, Delcy, she is in charge. She controls kind of the economics of the country. But then we have this other guy who's basically in charge of all the colectivos, who are the terrorist agents that basically can intimidate the population. And if you start going after all of them at once and really scaring them, they might use the colectivos to go all out and actually hurt the population. So this is kind of like, I think of it as like Jenga. Okay, you took the piece from the top, see what happens, and then continue to slowly take pieces from the Jenga puzzle without having it all come down on you and on the actual population that you want to, or hopefully want to protect, right? So I think it's going to be a very long process. But I think the right approach is being used, to being very careful about how you handle the existing political structure in there, and you kind of have to work with them because they are the system that exists there. And if you want to bring any type of economy back to that country, you have to work with what's existing there to be able to do it relatively quickly. And so to build up the oil infrastructure that has been destroyed for years, you need them to kind of help you out.
I want it noted that on February 5th, Juan Arias agreed with a Trump policy. I think that should be
I was
duly
going to
noted
say
on the
that.
podcast.
I agree with some Trump policies. I've never said I disagreed. Like,
It's hard to not feel American when you see the B2s going in. God damn it.
Interim president. All right.
The use of collectivos is throwing me, though, because my wife is Argentinian, and that's what they call buses. So
Oh no, different, very different.
We're gonna weaponize
these
the
are
buses and
guys.
take
These
over.
are like guys on motorcycles with guns
Yeah, I
that
get
just
it.
roam
A
around
little mafia.
and kill people.
Yeah.
But yeah, I think look, anytime we take a criminal out, I'm all for it. So
All right.
So badass. Industrial vacancy is forecasted to peak this year.
hopefully, yeah. So the forecast got slightly better this time around. So we expected the vacancy to peak around 8% last time. Now it's 7.8. So big shift.
Big move, 20
Yeah.
basis points.
Baby steps.
But we saw very strong net absorption at the end of 2025. A lot of that driven by larger buildings built to suits getting delivered and absorbed. But we still saw a lot of new supply come in. So the overall net absorption number was healthier, but the vacancy rate didn't really budge because of all the new supply that we got in. So we're kind of still in the same trajectory. The good news was that for anything above 500,000 square feet, the bigger stuff, the vacancy rate ticked down from like over 20% to 18%. So there is some improvement in the vacancy rate, at least for the bigger boxes. For anything between 100 to 500,000 square feet, the vacancy rate continues to go up and away. And that's in anything built in the last 5 years as well.
So you're saying older stuff is going up in vacancy as well? Like
older stuff is going up, but the older product has been going up in vacancy since like 2023 because we've had net move-outs from older inventory, particularly the larger, like mid-sized types of properties. They've seen net move-outs, and that's partly driven by the freight recession that we've been dealing with some smaller 3PLs going under and transportation companies going under. But now it's also driven by some of the space giftbacks from housing-related retailers.
Got it.
And some retail bankruptcies that happened earlier last year, like Party City and other big players that's had some logistics space out there that also impacted the move-outs.
And I see this graph. It's the same thing we already said before is West Coast is continuing to underperform the East Coast.
Yeah. And if you look at manufacturing construction spending, the tailwinds are basically Southeast Texas, some of the Midwest, but the West Coast is not a big hub for future manufacturing construction. So the expectation is that probably we'll get more tailwinds for East Coast ports. Probably less so on like containerized imports, but maybe raw materials being moved in to feed the new manufacturing eventually.
And you've got some protections there because land availability in most of the East Coast port cities is terminal at this point. Right? You can't. It's very difficult to site. Not like you got the port of Savannah where you can build a ton.
Mm-hmm. So there are still areas where you can build close to the port, but that would be closer to like in the south, right? The Carolinas, the port of New Orleans probably needs to get tapped. I think it's underutilized, and you also have Houston's going to continue. Like Houston amazes me the amount of new construction that it continues to have, and it doesn't have to be that far out from the port. I was looking. Yesterday for a client, I was looking at some Houston properties that are in close to the CBD, a little bit to the north, a little bit to the northwest, where there's a very big chunk of plastics manufacturing companies, And I was like, wow, this must be infill product. Like, you can't really build much more here. And I looked up just north of that property that was built in the 1990s. And just north of it, there's a ton of brand new product getting built. And it was like 5 minutes away. I'm like, okay, well, they still have land. And Texas is just, it's a different animal.
Yeah, and that's why I said, I mean, I'm not comparing the East Coast to, I mean, Savannah is certainly has some room to grow, but I mean, if you look at most of the main East Coast ports from the Carolinas north, the land costs are excessive, and there really aren't a lot of remaining sites, right? So the land values are super high, which means you then have to justify on a construction cost basis lead times and costs to replace. But relative to like the Texas markets, it's a no-brainer. That's why we're seeing a lot of that development happen down there.
Yeah. And if not, you have to go to like, and now it's not just Lehigh Valley, you have to go to like Reading, like other areas.
Really inland.
Where you find the cheap land where you can build this stuff.
Yeah.
But it's way farther from the port. Yeah.
And you might have already said this, but this graph kind of was impactful to me. The data center construction spend will surpass warehouse spend in 2026.
Yeah, the two lines were coming real close to each other by the end of last year.
I see the convergence.
Yeah, and with, generally the trends I'm seeing in construction starts and stuff like that, my expectation is that by this year, the data center line is going to surpass. Also, the amount of money is way different, the amount of money that's going to the data center construction than a warehouse, right?
Traditional, yeah.
So eventually, just by numbers, it's got to work out.
It sounded frothy.
So let's talk about migration and population growth. I think that's something that is really important to touch upon.
Yeah.
Because
we hit it pretty hard last episode.
Did we?
Yeah, I mean, if you get about three quarters in, we really dug into it. I didn't have a whole lot to add. Juan was mostly right about everything.
But but it seems like immigration is coming to a standstill virtually.
Yeah. So the latest data
we're not having babies.
Yeah.
So what's talk to me a little bit more about that, the latest data on that.
Yeah. So the latest data just came in, which was basically the census updating the population estimates, which includes domestic international migration at the state level. And that runs through the summer of 2025. And it doesn't look great. I think the trajectory is basically what we were expecting, where international migration is going to fall significantly. And then you also saw basically the proof that domestic migration to some of these Sunbelt states that saw significant migration coming out of the pandemic, that slowed down significantly. So if you look at the Florida numbers for domestic, they're really down from the pandemic levels and even relative to pre-pandemic levels. And then when you look at births minus deaths, we basically we're flat. We don't have any natural population growth in Florida. And that's the case in a lot of areas of the country. But it's particularly concerning here because our labor force relies on international migrants because those are the working age individuals that actually come here. Most of the domestic population in migration is retirement age individuals, even though that people like to say that that's changing. I mean, the trend is still 65 plus tends to be the in-migration. We need a growing labor force for a growing economy and a growing labor force to fill up the real estate. And if you look at our labor force growth stats, we're basically at zero in South Florida because of no international migration.
You know, Felipe, ever since we moved into Bureau, my productivity has been through the roof. I mean, I might actually be getting things done for once.
The energy at Bureau just makes work fun. Plus, with 8 locations across South Florida, from South Miami all the way to Hollywood, there's no excuse for not finding a spot to get your shit done, Ben.
And we're not alone. Over 500 local companies call Bureau home. Everything from creative agencies and real estate firms to tech startups, law firms, and media companies. It's a melting pot of brilliant people, and we don't include ourselves in that category.
We definitely don't include ourselves in that category. Bureau really has space for anyone, whether you're flying solo or have a team. There are suites starting at 100 square feet all the way up to 2,000 square feet. They also don't try to lock you into long-term agreements, and everything is month to month.
Let's not forget the important stuff either. The coffee is top tier, staff is incredible, and has a very entrepreneurial vibe. It's not just a workspace, it's a place where work actually gets done.
That's right, Ben. So if you want to level up your workday like we try to do every day, check out Bureau. You might even catch us sipping some espressos between podcast sessions.
Or tequila.
Definitely tequila.
Tell Bureau the Built World sent you, and you'll get 50% off your first month's membership. See you out there. Cheers.
Later. So at one point, does George Perez, Gil Deser, all these guys that desperately need international immigration to buy up their condos. When do they start getting pissed off?
Well, I mean, a lot of those like luxury condos. I mean, the luxury market's still selling. So the luxury condos are still selling. The transaction activity there has been healthy.
Who's buying those?
That's the thing. Like, is it people that actually migrate here, or is it people that still would just want to place cash in the U.S. and have it like a safety deposit box here? Mm-hmm. Because you still, like most of the buildings down here, you go around and wow, these huge towers that have been around for a while, and like who lives there? And they've been vacant for probably the entire time because it's basically just parking cash, right? So I don't know if we need at least for the luxury market, I don't think for the luxury market we need the actual bodies of people to come in. But for the rest of our economy, we do need the bodies of people to come in, and more so for the apartment market. If you look at the apartment market, the vacancies continue to tick up, and demand has slowed, and rent growth is very slow, because that's the more affordable housing option right now, right? So if there's no people moving in, there's no real apartment demand. And if there's no real apartment demand, then the retailers don't do as well.
There's household formation though in the meantime, right? It's not all from external immigration. There's new household formation with the existing population, and the kids age out and they start a new family, or they get out of the house. And
the issue with Florida and South Florida is that the younger kids, the 20 to 30, they tend to leave the state. So the household formation has been historically very heavily reliant on in-migration of international and the jobs that they're able to get. And right now, we're not creating many jobs. The labor force isn't growing. And so without a job creation, there is no household formation. So yeah, it's tough right now. And I think we're going to have a couple of years of a sluggish market until, maybe we change our policy around international immigration. Because we're definitely
at the
not
federal level, you mean?
Yeah,
because Florida's pretty open. Florida's ready to accept.
Yeah, we're not going to attract the domestic immigration that we've attracted in the past, because we've gotten much more expensive. Like the retiring baby boomer, how many of those are left? Florida is a much more expensive retirement option now, right? So that's why a lot of the
Carolinas, Georgia, Tennessee,
Texas, Carolinas, Georgia, even northern Florida, Orlando, they continue to attract a lot of the South Floridians that have been moving out, and that trend is only going to continue.
Yeah.
I'll go the opposite way with that.
Okay. I want to hear it.
I don't think anybody's moving from Miami to Orlando and being happy. They'll come back. Let's start there. Nothing against Orlando. I love Orlando. Maybe they'll move to Tallahassee. You asked about the condo developers before, and they're finding the market. They've been finding alternative international markets for sure. But I mean, if you talk to the brokers that are selling the high value, north of $1,200, $1,500 a foot product that's in the luxury market today, it's a different luxury market. When we needed that big mass migrant, when we needed that big South American cohort to come here and buy, was when we were building, 20,000 units at a time for $500 to $600 a foot. We were selling luxury, but it wasn't truly luxury. I think if you look at the condo market now, most of this product, particularly if you go to the beach, but even downtown Miami, it's much, much more expensive. But they are attracting domestic buyers. About 50% of the buyer pool is domestic, and it's coming from elsewhere in the U.S. to buy here. And then the balance is international, and they're just finding different international pockets, right, to sell to. But they're not overly reliant on 2 or 3 economies. Now that said, the headwind that's been against us for some time has been the strong dollar. So this recent weakening of the dollar could ease some of that pressure and actually have a positive effect on the international buyers coming to the U.S. But the federal policy of welcoming people from around the country has not been good over the last year or two. And that's clearly affected everyone in all classes of the buyer pool, right? I mean, there's people in Canada, they're just like, we're not even going on vacation in the U.S. because we don't feel good about it. The Europeans, same way. They're like, hands off. The U.S. can sort themselves out over the next year. Let's see what happens.
Are we? Do you guys have any insight into visits from Europe and Canada? Are we?
I think the tourism stats will definitely. I think the tourism stats absolutely demonstrate that Canadian tourism is down.
Oh, Canadian, yeah.
How about European?
Canadian. It's not as big of a component, but I would expect it to show the same.
Yeah.
Now you can say, that's because people, didn't want to come to the U.S. because they felt uncomfortable, or you could just say it cost them 25% more because the dollar was so strong, right? So some of that's going to play back and forth. If the dollar continues to weaken and stay weaker, then I think you're going to start to see a return to the same way that last summer, like everybody went to Greece.
Yeah.
Every U.S. consumer.
The dollar was so strong.
Right. I mean, for a while, we were all sort of coming out of COVID. Everybody was vacationing domestically because all the costs were, sort of still in line. And we said we don't want to leave the United States because of, coming out of a post-COVID mentality, right? You say, like, let's spend our money in the U.S. And then everybody woke up and was like, we could have a fantastic vacation in Greece.
The dollar's so strong.
The dollar was so strong, and the economy in Greece was super weak. And so, like, I just woke up one summer and for about 6 weeks, nobody was here, and everybody was in Greece.
Yeah.
I missed the boat.
Canada's cheap too.
And so what we're seeing, I mean, you talk about Canada being cheap, that's what's hurting our ski resorts, right? Besides the fact that we have unionization at the ski resorts and out of control costs and no snow. But I mean, the relative cost of going to Aspen or Vail today in the middle of the winter,
it's insane.
Relative to going to Canada is,
or even Europe.
Or even Europe.
It's
Yeah, I
50-50.
could pay for the airplane ticket, the hotel, the whole thing, and it's still cheaper to go to Europe.
Exactly.
Vail resorts.
Yeah.
Consumers find the way, right? And that's the market. Right, the market is voting with their But anyway, back to the condo market. I think the good news, at least from the perspective, we're not trying to get this big swath of people to come in and chew up 10, 15,000 units. It's a smaller pool of condo product. It's a much, much higher priced condo product, and about 50% of that is domestically driven at this point. So I think that's the good news on the condo side. I do agree with Juan on the on the multifamily side. The Southeast markets have been very aggressive in terms of building new inventory. We just released our annual Viewpoint publication, available on our website.
Where's our copy?
You know what? Hard copies are coming in like in a week.
Come on,
I'll get you a hard copy. I promise I'll sign it for you. But we did an analysis for each property type of what the percentage construction, what was under construction.
I would love to talk through this. So you guys just released this?
Yeah, it's on the website at irr.com. But basically, we looked at every property type. And
this is a great report, by the way, folks.
Thank you, I appreciate it.
You guys really need to dig into this.
We're in I think it's our 34th year. I forget what year. We're in the 30-year plus.
So give us a little summary on what you guys are talking about in there.
What we're looking at, besides the core economic indicators and general economic growth and some of the benchmarks there, really on the inventory side, is really what is the relationship of the inventory that's under construction over the next 3 years relative to standing inventory. And what we see is by product class, the percentages matter. But on the multifamily side, like if you've got about 3% to 4% of your inventory, your existing inventory now under construction, 3% more, 4% more, you're adding enough supply that it's going to start to affect rents. When you get to 7 and 8 and 12 and 15% of your inventory under construction, and you've got no demolitions, right? Then you're absolutely going to see a pullback in rent. You're going to see increases in concessions. You're going to see pullbacks in rents. You're going to see a lot more aggressive competition. You're going to see a flight to cheaper, A product that now is going to become more affordable, and so people will upgrade into an A product, which is going to drive B vacancies. So what we've been tracking is really looking at the construction in each of these markets to try and understand what the directionality of rent growth is going to be in those markets. It's all going to be absorbed. It's just a matter of time. How long are we going to go through a rent concession period in a lot of these markets? And, for the markets that are, a lot of the Midwest markets are actually, I don't want to say underbuilt, but they're stable in the amount of construction that we're seeing. And then if you look at the rent growth in those markets, it's steady, 2, 3, 4, 5% rent growth. Then you go into the Southeast markets that have, got a lot of under construction. Tampa's a good example of a market 2 years ago that had a lot of construction deliveries coming. And we started to see, first you see the increase in concessions, the amount of free rent. People forget that, when you say, a month's free rent. Okay, well, a month's free rent on every new lease and every renewal, though, is basically an 8% vacancy, right? It's 1/12 when you give away one free month rent. And so then when you start to give a month and a half or 2 months, you may have 3% rental growth, But when you factor in the concessions, it's negative rental growth.
Don't do that. The banks don't look at that.
No.
What are you doing?
They are starting to look at that. They are starting to look at that, thankfully.
It's the price per foot number. Don't get distracted.
Yeah. So look, there's definitely an effective rent story in a lot of these Southeast markets right now on multifamily for sure. But the good news is that a lot of the demand the economy's kept up. Right? We were talking about what's going to happen to the economy this time last year. And everybody said, there's so much uncertainty and the economy could turn. Most economists said chance of recession was less than 30% at this time last year. And yet everybody was worried about, but what about this and what about that? We have a tendency to spend a lot of time worrying and focusing on the risks. What's that old Mark Twain quote? He says, my entire life I've had a great many troubles, most of which never came true. We do a lot of analysis on this could be the turning point or this could be the inflection point. I would say that most of the clients that I've spoken to in the last 60 days seem pretty bullish on the direction of the U.S. economy going into 26. A lot better than they were in the beginning of 25. I think the general consensus is that we've reached a balanced point in terms of our policies, our rate policies. We've seen some declines, but not dramatic. The Fed waited until the end of the year to sort of make their last 3 incremental rate cuts to set up this year. And then they didn't panic in this last rate setting mode. I think that the bond market is reacting to the general risks in the economy and saying, you know what? Yeah, we're seeing rising unemployment, but we're also seeing continued strong consumer demand. I don't know where it's coming from, but we're seeing it and it's in the numbers. And so, hey, if strong consumer demand and we're at low 4% overall unemployment, and that goes to maybe 4.5 or 4.6 in some markets, that's still a strong economy. And so I'm seeing a lot of investors saying we're not expecting recession. We see the balanced economy. We just have to find the right markets where we make a strong real estate play, and let's just find a market that's got good demand characteristics. And that's the trick.
Yeah.
And I think that's going to favor a lot of movement back into the Northeast and the Midwest this year.
So aligns with my wakeboarding philosophy, which is send it.
Send
Go.
Like a Steve Aoki. What's that? There's a song. It's like
Is there Send It?
Yeah.
What's up, Builties? We're interrupting the podcast because we want to make some money together with you guys. We have a lease coming up that we're representing the landlord on. It's in East Hialeah. This thing is sweet, Ben.
It's a really sick warehouse. I mean, probably one of the nicest warehouses we've ever. It is the nicest warehouse we've ever been in.
Probably been the nicest warehouse we've ever been in.
This thing's got 25,000 square feet of total space, 5,000 feet on 2 floors of Class A office. I mean,
Class A-ish, industrial.
Dude, no, this is sick. This is a sick office.
It is a sick office.
It's the sickest office I've seen in industrial space.
Yeah.
Marble floors, really nice bathrooms. These guys built it out for themselves, but aren't ready to occupy this space yet, so they hired us to find a short-term tenant looking for a 3-year lease term on this thing. $18 a foot modified gross. The 20,000 square feet of the industrial space has 19-foot clear ceiling heights, and everything's brand new. Brand new LED lighting. Everything's clean. 2,400 amps of power, 3-phase, more than you could ever use. It's a beast.
Fully air conditioned too.
Fully AC.
Yeah.
Yep.
So they're looking for a short-term lease. They're super reasonable. If you got a tenant, reach out to us.
Cheers.
So Northeast and Midwest, where does that leave us here in South Florida, Graz?
Look, I think it's gotten very expensive to build here, and that's going to be a replacement cost problem. We have a lot of multifamily developers that would love to come out of the ground that can't justify the costs. The rent relationship to costs are out of balance right now in the marketplace. So that's problem number one. We can't get new supply in the pipeline. If the development pipeline slows in South Florida, problem is it's a pretty large percentage of our economy. So the economic impacts to South Florida, if we stop building, will be painful a little bit. So I think the reality is we've held up very well against the rest of the country, certainly since COVID. We still have a very robust economic outlook in terms of job creation and companies, et cetera. But some of the things that Juan mentioned, the availability of the workforce, that's always been a perpetual South Florida problem. The relative value of what you get paid to be in the workforce, the reason the kids go to New York or go to Boston or otherwise is just the relative earnings power in those markets is a lot stronger, dollar for dollar, hour for hour, whatever you want to call it. And so for us to be able to hold get the employers here and then hold them here for the long run, we have to see some appreciable increase in wages. Otherwise, kids can't afford to stay here. Mm-hmm. They can get a great job and they can make X dollars, but the cost of living here is so high that doesn't go as far as if they go to the Northeast and work in New York and live in New Jersey, or work in New York and live in Long Island. So,
and the problem there too is what we talked about earlier, which is it only really benefits developers to build the high-end branded luxury condo segment and not workforce, because the ROI is not there.
Yeah, although I will say, the Live Local impacts have been strong in South Florida. That's been a very positive. The Live Local opportunities here in South Florida, like if you look at the impacts of Live Local and the number of projects that have been started under that Live Local program, I think there's 120 projects statewide.
But none have broken ground in Miami yet.
Oh, no. I think that's wrong. I think there's over 50 in Miami that are coming out of the ground right now.
I don't think anyone's broken ground yet.
All right, well, we'll check on that stat. I'll go
but
back.
they're still really tough to get to make sense, because the yield on cost numbers still aren't to where what the LPs are looking for, because they know they can go risk profile. They can go somewhere else, less risk, higher yield.
Yeah.
And so why take the risk on new development? And that's really the issue that workforce developers are facing in Miami, because getting to the yield that they want to see, which is like I would say 6 3/4 plus, it's basically impossible.
Yeah.
In the urban core, even with free land, it's pretty like you need a lot of subsidy to get there.
And then it's questionable if you're really building workforce, but the rents are basically market rents.
Right, because 120 AMI is a big number. Yeah.
Are you really building affordable product, or is it just a tax break for more development? And we still have a lot of under construction underway in Miami. We're still one of the top markets for construction activity. So there's still a pipeline to get through. And I think the story over the next couple of years is going to be the 4 and 5 star product, at least in South Florida. It's going to be the 4 and 5 star product will continue to be challenged on the rent front, continue to offer concessions, try to attract renters from the Class B product. If there is no actual population growth, that's the only part of the demographics that you can tap into, is the people that are already renters that are in the Class B product. So try to get people from that, and then that'll create vacancies in the Class B product,
which will lower the costs.
But the issue there is like who backfills the Class B product if there's no growth in the population, right? So there will be a hole somewhere.
Yep.
And then we'll see what happens. But yeah, I see. We also have a lot of shadow inventory, right? So the actual condos that are maybe 1980s, 1970s vintage that get rented out. I see that in Aventura all the time. I live there. I have a condo. I've seen the rent prices there because we've had significant new construction of apartments there. We haven't had rent increases in the last 2 years, and the shadow inventory also offers much more attractive rents because they're trying to get renters, period. And they have a lower cost basis than the new apartment project, right? So the shadow inventory is also another concern down here.
And this is the animal spirits of the market, the same way the stock market has it. And so, the real estate investment players are looking at the Southeast and saying it's riskier. So I need to have more certainty. I need to have more confidence that this is going to, and our biggest variable is managing construction costs and proving out demand.
Yeah.
And that's what they're looking at right now. So I think it's easier.
It doesn't seem like there's much demand down here in the Southeast.
For the apartment stuff, not right now. And I think, the condo market, like he mentioned, the condo market, anything above $1,000 per square foot, it's going to be fine.
Yeah.
But that's a very small sliver of the entire commercial real estate market, right? There isn't much demand, and you've seen the weakness in demand for apartments, weakness in demand for industrial. Industrial has had negative net absorption down here for the last year. And retail rent growth has also slowed. There's been some restaurants going under, and some mentions around that as well, because the consumer side, right? You still need the bodies here to consume. Yes, you can bring billionaires, right? But there's only one billionaire, and he only needs to eat 1 meal a day, or 3 meals a day, but he just sits down at one restaurant a day, right? While if you have population growth and labor force growth, then you create more actual consumer demand that goes to restaurants and spends on these things, right? So it's good to get the billionaires. We need them, right, to eventually bring HQs down here and have a lot of investment. But if you don't attract the bodies that fill up the real estate, then you have a demand problem.
Agreed.
And that's what we're facing right now.
So, where are we putting our money?
Data center. No.
Sounds like data centers here.
Well, I mean, yeah, I guess you're gonna have to start your own data center
Buy a
strategy in
barge,
Florida.
start floating them out.
Sounds like Juan wants to open up the borders again too.
Yeah.
Yeah, I think it's tough, right? And I've talked about this for a while now, that this is no longer a real estate environment where you can expect cap rates to save you. That cap rates are going to come down significantly, and your value is going to come from just the contraction in cap rates. Like, you really have to be very smart about where you invest the money and where you can actually get the rent growth.
I talked about this, by the way, and just not to interrupt you, but I'm going to interrupt you because you're right on track. We hardly agree. No, I talked about this in my opening letter to Viewpoints. I said basically the investors are going to become more fundamentally driven, right, on the fundamentals of the real estate. They're not going to be as driven by the financial engineering that goes along. That was at the time making borrowing costs so low that you didn't care if construction costs were rising because you had free money. Or you expected the exit cap rate to be lower because, okay, I know I'm going to build this thing, but when I get done, I'm going to find somebody else to buy this at such a low cap rate that I'm going to recoup all of the money that I spend in the cost overruns. And so what's happening now is we're seeing the investment pool, particularly the equity side, much more selective, much more difficult on capital raise. And the equity side is saying, hey, I expect X% yield on cost, but I'm not going to put crazy rent growth assumptions in here. I'm not going to underwrite an exit cap that's 50 basis points lower than it might be today, right? So all of that is conspiring to just make the numbers not work. And that keeps paper from building. But that's the supply and demand in the market. I think that's a good thing. In terms of, though, investment, where do you put your money today? I think that where a lot of investors are looking now is where are the markets that are. I'm either going to take a really opportunistic investment in the Southeast, something that's distressed, something that's completely vacant, et cetera, et cetera. I'm not going to buy a stabilized asset in the Southeast today because the investment community thinks that's overvalued because the demand's not there for continued growth. But I'll go buy something that's fundamental in Indiana or one of the Midwests, Ohio or otherwise, because I can predict. Now it's not going to grow. The value's not going to grow as fast, right? But I can predict what the market's going to do because it's been steady.
I like that. That really aligns with the American philosophy. If you want predictable, boring investments, go to the Midwest. If you want something a little spicier, come down south. Find some distress.
I think, at least down here, anything luxury is going to hold up a little bit better. If you look at I think you mentioned earlier that the real retail sales were holding up better than it was expected. That's a lot of that is being driven by the top 20% of income earners in the U.S. right? So the high income households that have a lot of equity built up in their homes and they continue to have a job. that segment of the population has been spending, and a lot of it has been going, like, clothing stores have been doing really well. The restaurants have been doing it okay-ish. But then anything tied to furniture and all these things and the home goods, that's not been performing that well. But if you focus in on, okay, if the expectation is that employment growth is going to be a little bit sluggish, if you expect that international migration is going to slow down, domestic migration, people already moved significantly during the pandemic, now that's stabilizing as well, then you can't bet on continued labor force growth, household creation, which typically is like newcomers with lower salaries occupying apartments or whatever it is. It's the luxury market that will kind of hold through the next couple of years, and that's where you should be placing eyeballs right now. And that's why the condo above $1,000 per square foot here, that still holds up okay. And luxury homes down here, well-located luxury homes in good school districts, that should hold up okay. But the rest of the market, I see significant challenges ahead for all of commercial real estate right now.
And something we haven't talked about, I think we've covered every asset class other than office. When we talked about office, there's a huge office apocalypse nationwide for the last 24 months.
Not in Palm Beach.
Not in Palm Beach.
We hit this on the last one.
Our bubble excluded. How's office looking these days?
So, if you look at the major...
I feel like everyone's kind of like, yeah, that happened. We're over it. Whatever.
No. I mean, look, if you look at the major metropolitan areas, like New York's net leasing's way up, probably leading the nation in terms of net leasing stats for the year. There's definitely been a big push to return to office, which I think has been positive. I also think that, companies are starting to get to that breaking point, that elasticity point where they've gone a couple of years without the training and without the collegiate, the ability to train was always the difficulty with work from home, right? How do you recruit new and train and create culture and all that? And I think companies said, well, we can work through this for a year or 2 years, but now we're working on 5 years on, and they're realizing, hey, there's a fundamental shift. I've always said that there are industries that work from home or remote work will work, and will continue to work. And so we may never get back to the same baseline level that we were at before. But if you look at the net leasing activity in a lot of the major metro areas, it's been pretty positive. San Francisco's kind of back in the net positive mode. So some of these markets where we're like, oh, this market is dead, it's going to be dead forever, that didn't hold, right? That's been shifting back around. I think that in South Florida, for sure, I think we had at one point maybe 5 major down brickle towers that were planned. And I said, yeah, they're not all going to make it. There's going to be a fallout of planned expectations there. The really continued sort of interesting story around office is that, in my view, is that we see this separation between the A tenants and the other tenants that are looking for just office space and value. But the A office buildings are still holding up really well in terms of value in most of these markets. The leasing stats, people are coming back to work, so that gives some hope if you're buying into the office buildings. But the buildings that are not stabilized are trading at ridiculously low numbers. So there's a lot of people who are going to make a lot of money in the office space. Guys are buying in office buildings for 30, 40, 50, 60 bucks a foot around the country in major urban markets. They're going to make a fortune. And so there's still a lot of opportunities in the office market to buy cheap, either reposition or just hold until the market comes back.
Yeah, maybe the end use is not going to be office, but yeah,
it's hard to convert some of these buildings, though. It's really hard to convert them.
Well, they're like the Ryder HQ that was demolished for industrial, right? Like maybe you have to demolish because you're getting it sort of almost land value that essentially you can demolish it and build something new.
Yeah, the suburban campuses, if you can reuse those for industrial,
big parking
that'll
lots,
work all day. Yeah, that'll work all day long. But in a lot of the markets, you're really stuck with an office use, and once you have that, these old corporate headquarters buildings that are 30 years old become dinosaurs, right? They have to be redeveloped. But with bottom line is we're starting to see some stability return into the office market. We haven't seen that translate into a lot more trades. There's still a lot of fear around acquiring offices when you get into the acquisition room and say, hey, are we going to do this deal? It has to be a really good deal.
Talk about sending it.
Yeah, exactly. But the good news is with some transaction evidence and at least some rent growth, the capital markets have opened up a little bit so that there's better. But I started this career and cap rates were like, 8 to 10%. That was the range in cap rates would be. And I never thought that I would spend the last third of my career talking about 4s and 5s and sometimes even 3s.
Hospitality's there today, I think. Right? 10 caps are pretty average.
Well, that's what I was going to tell you. So between hospitality and the office market, like we're starting to see 9 caps and 10 caps and 11 caps.
It's back,
again. Yeah. Which is, that's the basis you want to be at for the risk that's being presented.
This episode is brought to you by Built World Advisors. Yeah, that's us. We're not your typical commercial brokerage. We combine deep market knowledge with a media platform that actually connects to people doing deals, the developers, brokers, architects, and attorneys.
Let's not forget the investors, Ben. From warehouses in East Hialeah to off-market gems in Allapattah, we help you find value where others aren't looking. If you're tired of waiting for opportunities to land in your inbox, let's talk.
Built World Advisors, real estate for the people who get shit done. You can check us out at builtworldadvisors.com.
Listen, I think with rising unemployment, the leverage kind of goes back to the employers too.
For sure.
And they're going to start reeling some of those employees back and needing to take up more space as well. What is, we really haven't talked, I feel like this is the first time we really talked about, the Midwest especially, and now the Northeast becoming, more desirable markets to invest in. What are the markets in the Midwest that you're seeing a little more activity in, Graz?
So I would say the preference towards heading back to the Midwest is multifaceted, right? And I just got back from New York this morning, so it was so damn cold up there. I don't know if I could ever go back. I just, it's hard for me to talk about.
Midwest.
I know, but
it's cold. But people are mean.
It's cold in Ohio too.
If you want a Midwest, it's really cold, but people are nice.
I know, it's really cold in Chicago too. Anyway, so I don't know if that's coloring my opinion on this, but no, what we're seeing is again the workforce availability there, the cost of housing, and the cost of labor is positive. The quality of life in terms of school systems and other, I'll call it socially functional, the social connectivity of the Midwest is really strong, and it appeals to people coming from other parts of the country. And they go, you know what, wherever else I was living, it's still cold here. I can relocate to a job in Ohio or Indiana or even Illinois. I think and I don't exempt Chicago for any other reason than that's sort of a different beast, right? But there's a lot of outlying suburbs in the Chicago Metroplex that are still very attractive for school systems and quality of life and cost of living and things of that nature. And yet you're still proximate to the Chicago metropolitan market. So, what we're tracking though is really the other element is, we spent a lot of time over the last 10 years thinking about risk factors, hurricanes, tornadoes, earthquakes, all of these things. And you go to Ohio and there's none of that.
Yeah.
Right. I mean, maybe you get a nor'easter every now and then.
There's the odd tornado.
So there's the odd tornado. And then, I think, look, people are not as mobile as we think that they are. We always talk about mobility, but the reality is that most of the United States is born and lives and dies in the same place. And that it's not normal. And I think our kids are theoretically more mobile today than they were in the 1940s and 60s and even 80s maybe. But practically speaking, these areas of the Midwest are also probably generating most of our internal population growth that is organic, that's not driven by migration. Yep. A lot of our coastal cities, migration is required to grow.
I mean, everyone I went to high school got pregnant at like 22, so I can vouch for that one.
Yeah, and so what I'm saying, just the values of the Midwest are real, and I would say that the people and the organic growth of those economies are growing a bit slower than when the rest of the coastal economies were on fire. But now 2% growth looks 2% population growth is unbelievable. 1.5% is unbelievable. And that is kind of the organic growth rate of a lot of those Midwest communities. So there is the sort of tendency to look at that and say, you know what, there's just organic, they don't need any outside influence. There's going to be organic growth there. There's going to be a need for new product, new construction, and we can kind of pace out what it is. And the only thing you can count on, or that can't count on, is that you're going to see some crazy spike in value. You're not going to get a huge run up. Like you might just time things perfectly and you hit Miami or Fort Lauderdale at the right time, and then boom, prices doubled and you exit it and you hit a home run. But for longer term investors, I think they're attracted to those Midwest markets for the stability.
What do you guys think? I'll zoom way out.
Yeah.
What do you guys think about just the population, the demographic trends in general globally? Like seeing what's going on in Japan and other markets. Like, what do you think happens to us long term? Because the U.S. I think has some replacement, right? Like we're
heading in the same direction, right?
We're keeping pace, but better than a lot of other.
We're still okay, but the trend would indicate that we're heading in the same direction, and a lot of it is tied to costs overall, the cost of daycare, the cost of housing, all these things have increased significantly, and so people are delaying having kids more and more into their 30s. And so those trends kind of delay the natural population growth. But I think all advanced economies are suffering from these issues, and I don't see it. I don't think government policies have been successful in changing the course in all of these countries, right? I have yet to see one country where they implemented some type of policy that actually changed the course. So we haven't figured out how to fix it.
Oh, the Chinese did. When the Chinese came out with their one-child policy, that changed the course of how many children are being made in China.
The way we did the way we don't want to go.
Okay. You're saying you have
that's
some
not,
positive.
yeah, no, I'm talking about turning
outcome.
it the right direction for us, which is having more kids. For the Chinese, that wasn't a good story. It still isn't.
It's a really cool question, though, because the ultimate question we should be asking ourselves is, how do we maintain momentum and value in the absence of pure population growth?
Because that's what it's relied on basically since World War II.
We've just been consuming and consuming and growing and growing and growing. And that's been a fundamental part of the economy. But, in a lot of our cities now where we're losing population, you say, well, what are we going to do? We're losing population. And that has a negative, that has a negative correlation to property values and job availability and whether people want to stay. And then you sort of get into a spiral where you start to lose people, and then that out-migration causes job problems, and then the new people being born can't have jobs. So how do we exist in a market that isn't growing as fast as we're historically used to? And that's really part of the thing that we have to figure out. I personally don't think that the world should go to 20 billion people, right? So I think if we say, well, we're just going to continue to grow, there's going to be a natural limit. And I think in the advanced economies, I think there are social factors that affect people's decisions. Cost is certainly one of them, but also quality of life, right? What we expect to give our kids today is like 1,000-fold better than what my grandfather was ever expected to give his kids.
Absolutely.
Right? So, you think about the cost of education and the cost of travel and the cost of the experiences that you create for all these kids. Like, I can't have 8 kids.
Yeah.
I could have 8 kids, but they would get 1/8 of what I was able to provide, or 1/4 of what I was able to provide my 2 kids. And so I think our expectations have changed, which is going to naturally slow population growth. I don't actually think that's a bad idea. I think we just need to learn how to reallocate our resources in a population that's declining, but still maintain our quality of life and maintain our growth. And some of that is technological. Right? Some of that is the positive impact of technology.
Fundamental human geography, the expectation has always been that the population patterns follow an S curve. So basically you increase significantly and then you begin to plateau. And that's what's happening with the advanced economies first. And then I think a few years back, the expectations that global population was never going to reach, was not expected to reach 20 billion, but it plateaus at around 11 billion, right? So we have, 3-4 more billion to go. I think the population growth is going to happen in Africa now, right? Like that's where the bulk of it is going to come from. And we're going to have to live in this world where, we're not a population growth hub anymore. And we're going to shift and historically the US, a lot of the population growth has actually come from immigrants, right? Like and most of the labor force growth has come from immigrants as well. So,
which has got to be, by the way, the biggest irony in the whole wide world, considering the dialogue that's occurred over the last 10 years. You
go to the 1800s, who were building the railroads? The Chinese were building railroads. You go to the late 1800s, Who were we sending to the Civil War? A lot of Irish immigrants that were coming in through New York. They were the soldiers that fought in the Civil War. Throughout our history, we've relied on immigration to help get us to the next level. And right now we're shutting that off. So look, immigration, I think, is always going to want to come to the U.S. because of the opportunities and how we have placed ourselves historically. But we've ebbed and flowed in terms of when we want immigrants and when we don't. And we're in that stage where we're like, nah, we don't. We already had way too many immigrants coming in throughout the pandemic, and now we want to hold off on that. And eventually we'll come back and we'll have immigration again, hopefully, and that'll drive some population growth. But in the long term, I don't think the natural population growth is going to be a substantial factor of our overall numbers. And like you mentioned, I don't know if that's a terrible thing. And I think going forward with the uncertainties that are being created around AI, robotics, et cetera, the question is, okay, you bring in all of these new workers, what do they do? Because, okay, we may need electricians right now for the data center construction. And then after that, you mentioned the job losses that we're having. We're having job losses in the software developers they're not getting hired. The financial firms are not going to hire that much. The consulting firms are not hiring either. They're firing as well. All of these sectors that are beginning to get impacted by AI, they don't need that many people. I remember like a few years ago, everybody that I went to business school with, and they wanted to go get an MBA, become a consultant, just make charts. Now you don't need these guys just making charts. The AI does it. So the uncertainty around the future of labor right now is also a drag on, like, okay, do I want to have kids? Like, are they even going to have a job? What type of schooling am I going to give them? Because even a few years ago, everybody was teaching their kids how to code when they were in pre-K. Is that useful now? The AI can code for you. So I don't know. It's the added uncertainty, right? Apart from the costs and everything else, the uncertain environment that we're heading into. We're not in that fixed economy where, like, yeah, you can just go become a doctor or a lawyer or whatever it is. That certainty around that structure and the deal that we used to have as a society, that's hitting everyone.
I'm not a biologist, and I'm only a part-time philosopher. But, you know, in any population, if you study any biological population, but the deer population is a great example, right? The amount of deer that get born in any cycle, because they have a gestational cycle that runs through the year, is related to their food availability and related to the winter before, i.e. the death rate of the mothers during the winter time, leading into the time when you would have new foals. Every population is based on, it shifts around based on resources. And it's not always explicit. It's not always logically explained. Like, everybody sat down and said, I'm not going to have kids this year because I'm worried about. But I can tell you, the kids today, I mean, my girls are in their 20s, right? So they're ingesting all of this today and thinking about it. And they're like not even thinking about having kids. I mean, they're in college right now. They shouldn't be thinking about having kids. But I mean, they're not even talking about it in the near future. It's like a decade plus off for them. And all of their friends the same way. I mean, they're really worried about what are they going to do for a living and how are they going to get a job and how to support themselves. And like, kids are the furthest thing from their mind. But then what happens is if we delay childbearing into, right now it's kind of in the late 20s in the statistics, but if you delay it into the early to mid 30s, you almost don't have time to have 2 or 3 kids.
Well, I think the latest stats I saw was there are more women in the U.S. Given birth past their 30s
than ever before.
Than those given birth before
in
their
their 20s.
30.
Yeah.
Yeah.
Yeah, I believe that. I believe that just based on informal.
Yeah.
So I think we find our way in terms of, you know, how we're going to populate. But I will say that culturally, because we're more secular, because we tend to have relied on immigration otherwise, because we're more educated, every developed nation that has those characteristics starts to have a non-replacement birth rate, which is basically less than 2 kids per family, right? And so we're in that point, and most of the developed countries are. And that means that we're going to have a outsized aging population than the working population, which creates other problems in terms of healthcare and the future healthcare. And the U.S. has been in a sort of a golden position in terms of its relationship to the workforce, to the elderly population, when compared to the other, G7 countries, most of which are in Europe and Canada. So the United States is entering a period where we're going to start to face some of these challenges as we are aging, and we don't have that working replacement population underneath us. We're going to have to figure it out.
We got Elon.
We got Elon. That's
The
positive.
Tesla robots.
Exactly. That's what I'm talking about.
Yeah. Listen, I think the U.S. has been such a great country for the last 250 years, and a lot has to do with us bringing in immigrants into this country.
And robots.
And robots now.
Yeah, but at least the immigrants need, like, right now, what is it, 600 square feet studio, right? They have apartment demand. The robots, I could put that in a closet,
Could
right?
fit 10 of them in
Does
there.
that help with real estate demand?
But I just I think we still need immigration in this country. I think we have to be more thoughtful about how we do it. And I hope we have, some leadership that brings in better policies. And it's both at the, very high level educated, but also at the, we need the electricians, we need the construction people. Like, how do we come up with policies that just isn't like, let's just open up our borders and let everyone in?
Yeah.
I think that's the tension, and I don't mean to make this political about immigration. The reality is that a lot of the backlash around immigration is around illegal immigration, and how do we deal with that piece of it? And then there's the other element, which is our immigration process is just antiquated.
Yeah.
And it's not, and I'm talking about our legal immigration process, it's just completely antiquated.
Exactly.
And it doesn't need to be. And if we could fix that and we attract the right people, but there is also the tension of, there's a certain amount of, I'll call it political, socio-political pressure to say we only want the most productive people to come to the country. We only want people that are scientists and engineers, and we only want the smartest people to be immigrants. And I don't think that that's the greatest thing either.
Yeah, I agree with you.
I'm all about balance. I'm all about balance.
Yeah.
Like, bring a little bit of everybody, because
because even
my grandfather wasn't a scientist, but he brought to this country
the hustle, and
he brought a lot of the hustle, and then he brought the descendants of him became spread out, and became great like me. You know what I mean?
So it I think you said.
Did you like that? Did you see how I worked that in there?
I loved it. Yeah, I respect that.
We got to figure out a way to bring in immigrants legally at all levels of the spectrum, right?
Yeah.
It's blue collar to white collar, right? Like, we have to figure out a way to make it easy, but also be able to track the people that are coming into this country.
Yeah, and I think right now we've been blaming the player, the immigrant that came in, maybe undocumented, and even some that are on TPS, that they found the legal means to stay here. And we've been blaming them and taking away the ability to become documented.
Agreed.
Which is the main concern that I have right now, which is, why is the blame all on them when we know that our entire system has been failing the immigrant for years upon years? So don't attack the immigrant. Yes, okay, let's try and go and get the criminals out, sure, but don't do a blanket approach of attacking the immigrant without looking at your system and how to improve it so that immigration can be through a legal means. And out of all the issues that we faced as a country, this is a bureaucratic issue that we should be able to resolve, even more so now with the technology that we have.
Agreed.
So I think we've been spending a lot of time blaming the immigrant and trying to get rid of them. And right now, ICE is buying industrial properties, warehouses.
That's good for us, right? It's good for me and you, Ben. It's good for me and you. It's good for the country.
Do you have a contact there?
ICE, yeah. ICE has
We
been
got a couple off-market deals.
Yeah. The financials are good, but they're buying warehouse properties to put immigrants into, and if that doesn't give you a little bit of a throwback to some other country putting people into boxes, I mean, it's really, really bad. Like, it looks really, really bad. So I understand we have to fix some of the issues around immigration, but fix it through the process and through the bureaucratic process that needs to get fixed. And when you also remove the temporary protection status that was creating a pipeline for people to stick around, and a lot of these people that had work permits, they had done all the legal requirements to stick around and do it the right way. And we have a lot of them here in South Florida, a lot of Venezuelans that were on TPS, completely legal, that you forced them to join the undocumented community. You kind of regressed some of the progress that had been made in some subsectors of the immigrant population, right? So I don't completely agree with the current policy of kicking everyone out. I think we need to focus more on the system and how to fix it. And we need, as we've been talking about this, like we need the immigrants.
We need population growth because I haven't seen one example of one European country, Japan, where population has declined and the economy has done well.
No.
If there's an example out there, please let me know. But I don't know of any.
And you have like a country like Spain.
Yeah.
My ancestors are Spanish. I spend a lot of time in Spain.
20%, 20+% unemployment for the last 30 years.
The unemployment rate is super high. They've had really good population growth. Right?
Have they?
Yeah. Really strong population growth that has helped GDP. They're trying to legalize, I think right now, like 500,000 immigrants. But there's a ton of issues behind those immigrants that are coming in because they're also living off of state welfare. They're not getting jobs. They come from a culture that is very different than the European culture, based on whatever it is, Christian values, a secular, advanced economy. We historically have not had, in the U.S., we haven't had the issues that the Europeans are facing.
They integrate much easier here.
We can attract the population growth the right way if we set up the right systems, and we'll have people from Latin America, people from Mexico. They come from Christian values, from societies that have developed over time as well with the similar capitalistic intent of coming here and working hard. So the tailwinds are there to do it the right way. Unlike for the Europeans and all these other countries, we can have a great country. We just need the system to help us do it. And when you're attacking the federal bureaucracy, I think there are certain parts of the federal bureaucracy that, you need to fix. But don't just attack it again, like blanket attack the federal bureaucracy. There's areas where you need to increase federal bureaucracy, and it's not just hiring a bunch of IRS agents that have not had any training, and this stuff blows up in our faces, right? Because you've seen the IRS.
IRS or ICE?
The ICE, not the IRS. Jesus.
I was rolling with you.
I
thought I knew.
And listen, Juan's not even drinking. Get him off the water.
It's late on a Thursday, man. The Panthers game yesterday was very intense. But
a lot of beers.
Yeah, you've seen the situations with ICE happening because you're hiring people that are not properly trained, and you're hiring a huge amount of people. Why not also invest some of that hiring on the system that in the future is going to take us to the proper immigration policy that we want? And I'm not seeing any of that yet. Maybe that will come.
But we've been talking about that since the Obama administration. What was Obama's program where he was going to let all the people that had been here for a certain amount of time? Was it DACA or DARPA?
The DREAM Act, like the Dreamers.
The Dreamers, right? And that, to me, it was uncontroversial. These are people that have been here, they're working, they're paying their taxes for the last day at a certain time frame. It was like, let them in. And there was another side that says, but if you do that, then you're rewarding them for not following the rules. And I'm like, but your rules are archaic. Like, fix that part of it. We've funded this whole infrastructure around ICE, and the reality of it is we've tried to police other countries. We've had military interventions in cities to try. You cannot control a population that way. It was just talk about overplaying their hand. And I don't blame I don't blame the infrastructure of ICE, right? These are people that are trained. A lot of them are very experienced, but they're going into an environment where there's 18,000 people in the community throwing stuff at them and calling them names. And so mistakes are going to happen, and it's horrible and it's unfortunate. But that's the consequence of what you have to know when you send your militarized border enforcement into a city with 50,000 or 100,000 people that are going to show up on the street. Like, bad stuff's going to happen. We should be able to foresee that. I agree with you, though. I think if we spent a lot less on enforcement and more in terms of making the legal process work, it's so political. It takes so long.
Yeah.
And
we just don't have time.
But it's sad because, like, if you look at the immigration, I'd say 99% of the immigrants that come here, they just want to come here and work hard and build, like, a good lifestyle, right?
And in my experience,
and we need them. So
probably 70 or 80% of the population of Americans that is here sees that, feels that, and knows that. It's almost like the policies that we are purporting to be enforcing at this point are not. That's why you have people showing up. That's why you have 100,000 people showing up in the streets, because they're like, what are you doing? You know, these are my neighbors. I've known this person a long time. Why are you throwing them in a van with no due process? And so I think that's part of what's getting lost in this message. The good news is this is just a little bit of this is a pendulum swinging, right?
Yeah.
It's going to swing one way, and then it's going to swing the other. I really hope that we use our technology infrastructure and our political will as a population to demand our government to fix this. Otherwise, we're not going to have the same arc of population growth and growth in the U.S., which is going to have negative consequences for everybody. So, I mean, if your listeners care what I think, the answer is, like, support the reform of how we bring people here legally to be productive part of the U.S., because it's worked in the past, and that's why we're here.
And do you think they prefer AC or non-AC warehouses?
I'm going to go with the AC.
Clear Heights.
Clear Heights, man, or less. You need a percentage office with bathrooms and stuff like that. But, Jesus.
You guys have jumped the shark on the show. I don't know how we jumped it so bad.
So population growth, we need it. We need it. We just needed to do it smart.
Yeah,
and thoughtfully.
I think also historically we've had certain groups that have benefited from the undocumented migrants. And that's part of why the laws also don't get fixed.
We all benefit from the undocumented migrants.
Right,
I mean, for sure.
But there's
I pay for lettuce what I pay for lettuce, and if it wasn't for
there's
undocumented
very specific
migrants.
industries that really benefit from it, and they don't want it to get fixed, because in reality, you have workers without any protections and with lower pay that you can continue to, take advantage of. And that's another factor that is a detriment to actually getting anything done. So, it's a mix of factors. I don't see there's an easy solution to any of it, but I would love to see at least a step taken in that other direction, less around what you were saying, less around the enforcement. I'm more about, okay, so what's the future now? What is the process now to do this right? And it can't just be the golden visa or the
Right. They
it's
pay
like,
$5 million.
$5 million. Yeah. Like 2 people can do that in the world. But yeah.
All right, cool. Well, it was a very lively conversation, more political than we usually are, but it's almost like we actually agree on everything here.
I think it was a good catch up.
It is. Yeah, for sure. Well, thanks, Graz. Thanks, Juan.
My
always
pleasure.
great seeing you guys, and we hope to see you guys back here in a couple months.
Certainly.
All right, guys.
Sounds
Cheers,
good.
guys.
Thanks, guys.
Awesome.